So we'll look at the intermediate accounting rules for gains and loss recognition on asset exchanges when we're dealing with commercial substance. So the rules do vary depending on where you are in your education. And this will involve two accounting issues. You're selling an old asset and you're purchasing a new one, so it's a combined journal entry. And how do I do it? Well, first let's review commercial substance. Will the new asset increase future cash flows? If the answer is yes, then it has commercial substance. If it's no, then it lacks commercial substance. And you really don't have to make this calculation. It will be given to you in the problems. But what else does this mean? Well, let's say King Pizzeria's Northern Colorado store has an old pizza oven reaching the end of its life. Historically, the pizza oven has generated $150,000 in cash flows from sales annually. The CFO is considering trading in the old oven for a new model, which promises to increase efficiency, resulting in an increased sales and cash flow to the business. Then yes, it has commercial substance. But let's say same example, only this time the CFO is considering trading the old oven, which will have no effect on future cash flows. CFO is looking at the current financial position with the hope recording a gain will increase year-end bonuses to management team. Then no, the exchange lacks commercial substance. So the rules regarding recording gains and losses vary based on where you are in your education. In accounting principles, this very simplest rules are introduced where we tell you no gain or loss is recorded when it's lacking commercial substance. This is just to help you practice how to adjust those journal entries when it does lack commercial substance. But technically, the rules are more advanced. In intermediate accounting, we then introduce the concept more of conservatism, where a loss is always recorded. The gain is recorded. No gain is recorded when lacking commercial substance. But technically, their rules are even a little more advanced, which will be introduced in a separate video. The advanced version, recording gain sometimes. It depends on many different things. So FASB rules created to prevent companies from exchanging assets just to record a gain. You could almost think of that as an artificial gain. Recording of a loss is allowed to follow the rules of conservatism. The actual rules regarding how gains are handled are actually a little more complex. So at this level, at the intermediate accounting level, just think no gain is recorded, but recording a loss is okay. So let's say we have an asset we're going to consider trading in for a new one. The current book value is $24,400. New machine costs $65,000. The dealer is going to give us a trade-in allowance of $20,000. That's what they're estimating the fair market value is of your old asset. So you have to come up with $45,000 cash on delivery. But just looking at this, the trade-in value is $20,000. Your book value is $24,400. This is a loss. Now, with or without commercial substance, let's take a look at this. I remove the old asset, remove the associated accumulated depreciation, place the new machine on the books, record the cash going out. So to balance, I have a loss. Because of the rule of conservatism, this is my journal entry, regardless of commercial substance. All right, let's review normal balances. A loss will decrease income, so the normal balance is a debit, just like in an expense. A gain will increase income, so the normal balance is a credit, just like a revenue. Okay, now let's look at another example. Let's say they're going to give us a trade-in value of $28,800. Means I have to come up with less cash on delivery. This represents a gain, same amount for this example. With commercial substance, add the old machine, add the new machine, remove the old machine and the depreciation, record the cash going out, and then balance your journal entry. You have a gain. This is the journal entry if you do have commercial substance. But what if you lack commercial substance? Then in reality, doing the math, you do have a gain. You're just not allowed to record it. So you remove this from your journal entry. You still have to balance, so you adjust the book value the starting book value of the new machine. And this should make sense. If it costs $65,000 and you got a gain, then you record the net cost, $60,600, not $65,000. So when you do an exchange, first thing you have to do is update depreciation, then record the exchange by recording the new asset, remove the old asset and accumulate depreciation, record any cash going out, or it could be coming in actually too. Record a loss, always, rule of conservatism. Record a gain, well, it's going to depend, and those are the advanced accounting rules. But for this level, is there commercial substance? Will the new asset increase future cash flows? Then yes, it has commercial substance. Yes, you can record the gain. If it's no, it lacks commercial substance, and you do not record a gain.